Okay, folks, so here we are with this week's Fife Property Update. If you just bear with me, I'll just jump on and get a couple of changes to here. Here we are. Just need to know my name. It's there now. Anyway, let's talk about this week's Fife Property Update. This is from the week beginning, the 27th of November to yesterday, the 3rd of December. A look across the whole of the Fife property market in order to give us a flavour of where we are in terms of supply and demand, and also what is actually coming to market, what is being sold and what price for, and then also what has actually been sold this week for us as well as every other estate agent right across the board. Supply and demand figures are really important at this point in time. A couple of other things I want to talk about is the current state of the UK economy and how that affects the Fife property market in general. Fife property prices, winners and losers, is an article that was done during the week, which was a show, and also selling off market yesterday, which was done by Susan, Perry and Jimmy, right across. And can you get still get the best price for the buyers in terms of best price and also the best buyer out there in the marketplace? This is quite interesting, the statistic coming up right now. This was last week's numbers, and I thought it was really interesting, the fact, and it falls in line with what I say every single year. And the run up to this period of time, this is the best season to sell right now. And the reason why is, look at these numbers. Demand is still there, as I've always said before at this time of year, but supply starts to drop. See that? So last week, 69 properties right across Fife came in the market. 103 properties actually sold. So demand is still there. And I've actually got some graphs compared to last year as well to show you that as well in terms of supply statistics and numbers all over. So as we look at the Cooper market, 6 properties came on last week, 8 properties sold. East Neuk, 1 came on, 5 sold. I say it again, best time of year to sell. The demand is always there. Before the internet, what used to happen is everybody had to shut down. The solicitors and the estate agents shut down. Therefore, nothing could happen. Now, because of the internet, the buyers all have the technology right at their hands and their fingertips. So when they make a decision to buy, they can see the property straight away. They no longer need to wait for an estate agent or solicitor to open or anybody to open in order to do business. And they'll just contact the estate agent direct. So this is why it's the best time of year to buy and the best time of the year to sell as well. For this very reason, best time of year to buy is because there's a distinct impression out there from everybody that you get lower prices at this time of year. Well, I'm going to call that out and say that's not necessarily true, because you get sometimes the highest prices at this year. What happened to me on the 1st of January this year, we sold a house in Crail, a flat, for a record price, over £200,000 for a 1-bedroom flat in Crail. The one below was sold a month before by another estate agent for £45,000 less than ours. You get the record price at any time of the year, at any point in time, as long as you've got the right estate agent. That's all it comes down to. If the buyer's out there, I'm selling. Okay, so let me talk about the property market itself. You've seen the numbers for the week. Let's just pop onto them and we'll look and we'll just investigate that a wee bit further as well. See, the Dunfermline market has been going for ages with an oversupply, and now it's only 28 come on and 54 sold. This is because, again, most people out there in the States are telling you, don't sell it this time of year. Wait till next year because that's the best time. That's not. That's because they've got their party hats on and they're ready to shut down for the year. They don't want the hassle of having to deal with your property for sale at this time of year because they want the period of quiet and for them themselves. This is the best time of year to sell, and I can't emphasize it enough for this reason. Demand is still out there, and I'll show you some graphs to show that. Glenrothes 9 versus 7, Kirkcaldy 16 versus 17 as well, Leavenmouth 7 versus 4, St Andrews even 100% sold of what was actually listed, 5 versus 5. Again, that's unheard of for St Andrews. It's usually about 80% of demand. So therefore, St Andrews is the point as well. Let's look at the November period. This is the build up to this time of year from December, January, which are usually the best seasons. Remember, the Boxing Day bounce as well will come in. So that will happen just after Boxing Day, where demand doubles almost overnight and people start buying again. So this is why it's important to get yourself lined up for it now. Okay, so November, this is what happened right across the whole of the Fife property market. This is where the oversupply came in. There was 90 properties. See that? 496 versus 406, which we thought would happen anyway. The oversupply is starting to come back in, but it's still not more than what actually was before this period of time. Let me just look. I'm going to just search a couple of graphs here, and I'll see if I can show you them. I'm going to jump onto Zoopla, and I'll show you in a minute. So zoopla.co.uk, we are going to type in Fife, we are going to search, and we are going to, yeah, that's exactly what I thought it would be. Okay, let me share this screen with you for Zoopla. I'm going to remove that. I'm going to just quickly jump on the Zoopla screen. Here it is here. Now, if I can catch it from here, Chrome tab, Zoopla, hopefully you can see that. Hopefully everybody can see that. Yeah, everybody can see that. Okay, so this is Zoopla right across the market. This shows you what is actually selling across the Zoopla. 977 properties for sale. See that in there? I've circled it. 977 available for sale right through at Fife. It's not broken the 1,000 barrier yet. Before the pandemic, it was sitting at 1,200. Therefore, we've still got less properties on the market available for sale at this time than before the pandemic itself. And even before then, it was an extremely buoyant market. This is the period where we've had an oversupply of property. Therefore, everybody's had a lot to choose from. We could possibly see the undersupply or undersupply of property and demand still there. And therefore, this number 977, we're going to keep an eye on over the next couple of weeks to see if that actually comes down again. If that starts to come down, therefore, there's less on the market for people to buy. The demand is still there. This then says to us either properties will actually sell very well, it'll be a stable market, or possibly you might get a bit more than you thought before because people realize that there's a limiting supply out there again. Let's jump back to our numbers. As I do that, I'm just going to stop sharing that screen and here, and I'm going to jump back to our numbers before. Let me just jump back to them for you and show you them again. Okay, so here we are right here. Here's the numbers for the month. As I said, there's 90 properties more than what was actually come on and sold in the market. But look at Cooper. Cooper was very buoyant, extremely well still. 36 properties came on, 35 properties sold, so good demand in there. East Nuke, 17 came on, 13 sold. So, yep, even Stevens there. St Andrews still did well, 42 came on, 39 sold. Leavenmouth, 26 came on, 39 sold. Demand outstripping supply in the Leavenmouth area. Therefore, Leavenmouth should be doing quite well in terms of, now you'll find in the Leavenmouth market is very affordable. So it's generally the price of the houses round about the 200,000 and below are the ones that actually go very, very well in Leavenmouth. And that's where that mix is coming from. Dunfermline, 203 versus 173. That's a lot of new builds. Glenrothes is similar as well, 65 versus 33. So is Kirkcaldy, 107 versus 64. So we can see most properties are actually coming in the areas where there's a lot of new builds. Now, what happens here is everybody's selling in these figures, the 203, the 65, and the 107 from Dunfermline, Glenrothes, and Kirkcaldy. But what's happening here is when they're selling them, that's fine. They're putting them on for sale. But when they go to buy a new build, the new build doesn't get reflected in these numbers. And sold in here because they're not registered on Rightmove, so these numbers don't come up. So while these numbers actually reflect lower values in demand, you probably actually find a lot of the new builds are actually being sold, which are not reflected in these figures. And if they were factored into here, into the sold figures, these numbers would come up and show us a picture of the market. It's very, very stable in Dunfermline, Glenrothes, and in Kirkcaldy as well. Let's just cover a couple of figures here. And I'm going to show you. It's emphasized to me that the market is still quite stable. Okay, so this is our website, and this is our numbers over the period for last year, this year versus last year for November. So you can see there November here versus November 2021, and we are up on the numbers for this time of year in November. You can see that up by 1,000 users in here. So almost 30,000 each month, so 30,000 this month in November, and you can see the thick blue line here is right here going through. That is the current period for November this year versus last year's November. And you can see they're more or less stable. They're more or less exactly the same trajectory. See that, how that goes, and that huge spike up here, and it's similar up here as well from last year, and then it goes right down. I don't know what's caused that, but then for us, the thick blue line is the one we are more concerned about in comparison to last year, and it's still actually really good. And if you look at the current day, to the end of the month, you've got almost about 900 there every day, and then you've got 750 just now. So that's pretty good for a media. It says out there to everybody that we're still not seeing enough people buying property, and the property market seems to be crashing. There is no clear evidence. Let me say that again and take this away. There is no clear evidence to me that the property market is actually going to be crashing anytime soon. Okay, so let's then look at the next graph, and here, this is how people search on our website for their property. So what we're showing here is, again, these numbers are up, but you can see that last year's mobile searches were a lot less than this year's mobile searches. This is why you need an estate agent with a really good strategy for mobile technology, because look, that is where all the people come from. Over 2/3, if not a bit more, is actually coming on a mobile platform. Therefore, they're all looking at a screen which is like this, not like that, because it's very rare. Most people watch their mobiles like this in portrait format. They don't watch it in horizontal. They tend to watch it in picture format. So therefore, you have to have an estate agent. You have to get someone. It's actually got a really good strategy for mobile technology and actually videoing and recording in this format and displaying in this format as well, in that portrait format. Even Samsung's developing vertical televisions. That's the new technology for the younger generation. That's how they adapt and integrate and use technology and in terms of the property market itself. So that's why you have to have a really good technology and really good estate agent with a technology and handle on the mobile market. You can see tablet as well is quite a lot lower than what it was last year. So is desktop, but it's because most people are actually searching on mobiles now because they've got great technologies available there and everything like that. Okay, so then where the most people come from as well in terms of onto websites and search for property. Well, we can see straight here, direct is down. That's another, people just go in and type the website address of the person. That's direct is down. Organic search is down. That means people aren't just going in and typing an organic search, but we'll look at the social market. Social media market, this is social media presence, has gone up from last year for us by almost 100%. The people that are coming through social media are vitally important. This again tells me you need to have an estate agent who has a real good handle and real good experience and expertise in the social media market, because that's where your buyers are all going. That's where they're hitting them first. This is the television of today. Your television that you're watching the telly is now the radio, because it sits in the background while you play with your phone. I'll defy you to tell me something different. Because we all know that's what happens, don't we? Because we all sit and look at the social media and we look at our mobiles while the television is on in the background every single time. And we all spend our time on our mobiles, about 3 hours a day on average. I would argue that could be more for some people. That's why you have to get in front of people on this mobile format and this technology. That's why you have to have a good estate agent with that, as I said, the mobile social media market technology, because that's where the numbers are coming from year on year. That's where the emerging market is coming from as well. That's where most people are coming in as well. And that's the platform, the mobile technology we've got here that people are actually engaging with. So that's why it's vitally important that you have an estate agent with good mobile phone technology, also good adaptation to the social media market as well. Let's the numbers and also the market in there. Okay, so let's look at the average number. This is another statistic over the whole of the UK. This is the average number of UK properties sold per week since November 2015. Notice the average in here is round about 25,000 properties sold every single time. If you drew a line right along 25,000 properties every single week sold since 2015, you'll see that is not dropping that much at all. Now, the periods where it drops quite considerably is actually when it comes into the November-December period. That's because it goes down to zero because Christmas Day. Most people do switch off on Christmas Day. However, what happens after Christmas Day is that boom, it goes right back up there onto the Boxing Day bounce, and then people are right back on stream again until it comes down to the next year and it drops again Christmas Day. So all these drops right to the very bottom are the Christmas Day periods. That's probably the pandemic there. If I zoom in on there, beginning of the pandemic, yep, March 2020, beginning of the pandemic. Every single one of these are Christmas when it drops to the almost to the 0 point, which is Christmas Day. But as I said, the Boxing Day bounce booms it right back up. So if you're ready to go, now's the time to sell right after Boxing Day, where you could hit that market, where you've got that stream, where you've got that head start away from everybody else, way before everybody else, and then you get in there before everybody else, because everyone else is waiting. I'll maybe wait till the flowers come out. It's like you're too late. You're losing this market. These are the people right here, 25,000 people. By the time you've got your flowers out in your garden in spring and summer, everybody's sold their house, and all the buyers that you would have got then have now actually bought a house by now. So you want to jump on that straight away, especially if you're ready to go. Next one, actually quite an important one. This is the lifeblood of the market. This is the first-time buyer mortgages payments. This is first-time buyer mortgage payments, as you can read there, as a percentage of take-home pay in 1983 to 2022. This actually gauges the health of the property market. First-time buyers are vital. First-time buyers are vital to the health of the property market in the whole of the UK. You need the first-time buyers to come in at the lower end to buy the properties from the people that want to upgrade to the middle market, and the people from the middle market then want to upgrade to the top end of the market. The people from the top end of the market also want to then downgrade to possibly the lower end of the market, to downsize again to the sort of first-time buyer mid-market as well. So that's what keeps a healthy, sustainable market, as well as investors and private landlords. You can't get away from that, because these are the people that buy in these sort of markets as well at the lower end, which allow people to upgrade and that flow through to come through. We need a healthy private rented sector. We need a healthy rented sector, full stop, right across the board, with all tenures, private rented, social sector, the housing association sector as well. We need these three types of rental market tenure in order to sustain the market, in order to sustain the economy as well, and have a healthy relationship. Some people just don't want to buy their house. It's an easy commitment for them because it's no commitment, because they can walk away of the rent anytime they want and move anytime they want, or go anywhere they want, because they've got no tie into a mortgage, they've got no tie to sell a house, they've got no entry and exit costs that are huge to buy and sell a house, and they don't have that. So that's why they love that. They also want mobility of labour to move around, possibly because their job, because they're maybe a contractor, a subcontractor, and it maybe allows them to move around. Maybe they work away from home as well, so they can choose to live anywhere else in the whole of the world effectively. So why would they want to then buy? Some people want that. Some people don't want the tie of a mortgage. That's why a healthy private rented sector is a really good thing to have. Hence the reason why we need good policies, which maybe aren't going in our favour just now. Rental freezes and moratoriums on evictions are scaring off landlords. There's more properties getting sold right now from the private rented sector into the private ownership market, and that's fine. You know, but if you don't have a healthy rental sector, then you've got a complete restriction in supply. Therefore, you've got people that have got nowhere to go because they can only rent. They cannot buy. That's why you need that. That's why it's important to have a healthy rental sector. Anyway, back to the first-time buyer market. You can see there's a percentage of first-time buyer mortgage payments. There's a percentage of take-home pay. This is actually quite interesting. So in 1983, it was round about just under 35% of take-home pay for a first-time buyer. And then when we got up into the early 2000s, it was about almost touching 50%. But then that's when the recession came in, and it dropped dramatically because house prices dropped, and then it dropped around about the 16%. Now that It's great for a first-time buyer and it's great for all our buyers, but it's not healthy rent. It's not a healthy housing market. Therefore, because you've got a lot of negative equity owners, because there's a lot of mortgages on these properties. So therefore, it came up, and then you can see the credit crunch, how that percentage came up, because house prices went up dramatically, up again to around about the 45%. And then again, the credit crunch came in, and that then dropped again because house prices dropped. Now, house prices are still very, very affordable. Therefore, you're round about under just about 35% of take-home pay for a first-time buyer, and that is almost like the average of the whole market itself. You can see that if you drew a line right across there, just under 35%. You can see that right there, where that would actually hit most of these points. Therefore, that tells me that the first-time buyer mortgage payments market, the mortgage market, is actually still quite healthy in terms of the percentage of their take-home pay that they have to spend towards buying their first home. And it has been, the market's been healthy all the time since then. So being around about the average is actually a really good place to be for first-time buyers. You wouldn't believe it though, but it's cheaper today to buy a house as a first-time buyer than in 1989, as you can see there, where it's a way up here, and in 2007 compared to 2007 as well. It amazed me. Yet it just shows how much the newspapers spin things for bad news. Of course, the graph is going upwards and it will be higher in Q4. The interest rates will need to rise. Probably base rates will need to go from 3 to 4%. Although, when we actually looked at this was maybe not necessarily the case. They've actually predicted that inflation might not be as bad as they think in Europe. This was just last week. And also in the UK, they're now beginning to think inflation might not be as bad as they think as well. So therefore, interest rates might not need to rise as rapidly as they think as well. Hence the reason why the pound against the dollar is actually really, really strong now in comparison to what it was before. And actually the euro is actually quite strong in comparison to what it was before as well. And the FTSE 100 index is actually performing extremely well, almost back to the record values that it had before in terms of the price. So everything is extremely stable right now. And I will reiterate this, I don't see any evidence clear cut right at this point in time. I did see maybe 3 or 4 months ago when we had all the volatility, but now all the messages are coming out from the European Central Bank, from the Bank of England, from the Office of Budget Responsibility. All these different people are actually singing a softer version to this housing market, not the doom and gloom and dramatic exposure they have to the price crashes that we had in 2007 and in 1989 as well. So they don't have that. So therefore, we're still in a very, very stable market, and we'll still continue to do that next year. Now, they think that house prices now, successively, the Nationwide's on, and the BBC are broadcasting this morning. I've got to say it's the British Bullshit Broadcasting Corporation. Excuse me for the language, but really you have to call it out for what it is. And they tend to exacerbate the situation. So the Nationwide actually says for 2 months in a row, house prices have actually dropped. But house prices are still at 9% year on year. So yes, obviously, they would drop at some point in time to stabilise, or would still continue to have a 9% increase every single year. So you have to have a monthly drop, or the 9% will never disappear and the market will never stabilise, and it will still continue to go up all the time. So in order to have stability, that has to happen. So therefore, if you hear successive drops happening month on month and the doom and gloom coming out from the media, it's not because of the market is crashing, it's because it's now levelling off. Okay, I mean, yeah, it's tough out there, but it isn't the end of the world. I'd be interested to know other people's thoughts on this as well, because this is what I clearly see, and hopefully you'll see that as well. It tells me a lot in terms of the housing market and where we are and how stable it is right now, and how it's a golden opportunity right now. If you're looking, if you're ready to go to sell, don't wait till next year, do it now. That's a very important thing right now, is to go now. Your estate agent will be as busy or as quiet as they want to be. Now, trust me, most of them want to be quiet this time of year because they want to get the party hats on. But I certainly do not want to be quiet this time of year. We're open for business. We're ready to go. We're still motoring ahead, and the train is still going. The momentum is still there. I've just shown clearly that the demand is still there. When you look at all these graphs right there, right there compared to last year at this time of year, right there as well, and right there especially where you've got less properties coming on last week and more properties actually selling. Demand is outstripping supply again for last week. Will it happen next week as well? Who knows? We'll find out next week. Let's then talk about what's actually coming to market. So I'm going to quickly jump on that right now. If you just bear with me, I'll get some graphs up. Okay, so this is actually what's sold and not sold. I quickly there is the selling off market and where you can actually do. We'll just cover that right now. Actually, selling off market. That was the show that was done yesterday. The podcast and the show is on there. Also, the article that I've got here in my hands is there. It's why do people sell their homes off market. It also talks about how you can choose the right agent to sell your home off market. Will you get the highest price by selling your home off market? I don't think so. But that's just my opinion. Read the article. The most important thing you can do is arm yourself with the knowledge and the expertise in order to make an informed decision. That's the key here. That's all we're doing. We're giving you knowledge and the expertise to make an informed decision rather than just basing it on pure opinion of anybody else. What do you think about selling your house? Well, I think it's maybe a bad time of year to sell it. Really? Because my statistics don't show that at all. My numbers don't show that at all. So be careful out there. Take people's opinions. They're free. That's possibly what they're worth. Are you enough? The other one is in here as well. Are there enough buyers to sell your home off market? Yeah, potentially there is, but potentially there might not be. You'll always get the best put on. You'll always get the best price, to be honest, put on the market, because then people compete against that to get your property, and it's all about supply and demand, and it's all about the fact that they then think that somebody else might see it before them, therefore they might get in before them. Some people do want to sell off market for various reasons, and that happens, and we do sometimes sell off market more or less before it gets to any market, and it's generally because people walk in the door and say, I'm ready to go, I'm ready to pay an astronomical amount over the home report valuation. I'm quite happy with that to get the house of my dreams. I don't want to faff about. I don't want to get involved with anybody else. I don't want to go to closing dates. I don't want to do anything like that. I'm ready to go, and I'm going to pay the bucks to do it. That's what off market sometimes does for you. We also talk about what the pitfalls of selling your house off market as well. So that's in that article. Please take time to read that if you're looking to buy or sell right now. Buying, especially because it also tells you what you should be doing, what you shouldn't be doing, and also definitely for sellers. If you're looking to sell or you're thinking about selling, you need to read that article at least. It takes you 4 minutes. Invest 4 minutes of your time in getting the right knowledge and information. If you do want to listen to the podcast or watch the show online, then just click on the link above or below. The other midweek show was about Fife, the falling Fife house prices. That was talked about in the winners and losers. Now, this was quite interesting because this was done during the week, and this was 2020 versus 2021. There were exceptional years for the property market itself, but it also tells you, like what I said before, the average number of properties sold. Look at it here. Look, all the way along. 2016, 2017, 2018, 2019. Look at the graph. It's really low, the average number of properties sold every week in Q4. And in 2020, it went from 16 to 23,000. 2021 was 21,000. And still in 2022, we're sitting at almost 20,000. In comparison to before the pandemic, there was 16, 15, 15, 15. So it shows you right now that there's still a huge demand for houses in comparison to every other period before the pandemic. The numbers don't lie. So that's a really good article to read to reinforce your knowledge and your information. Why do newspapers use, this is another one that's in this article, why do newspapers use the phrase house price crash to sell you more of their information? Well, it's not really information, it's just rubbish. Garbage in, garbage out. Garbage in, garbage out. Think about that. Arm yourself with the right information. So who wins when house prices drop? Actually, you do, the buyer. But also the seller wins as well. And it talks about it in here. Fife house prices rising has cost you an additional £6,000. But that can actually be, you can actually save that as well by actually selling and this type of market right now, and you can actually make that money. As over 7 out of 10 homeowners move up the property ladder. Falling house prices are not necessarily the problem. It talks about it in here in this article. So who loses when house prices drop? That's what it talks about as well. Just over 2.9% of homeowners will be in negative equity if house prices drop by 10%. So if there's a house price crash, big deal, 2.9% of people will be in negative equity. Do you know what it was in the credit crunch? It was sitting at around about 19%. Huge difference to where it is now. Most people, a lot of people do not have mortgages on their house anymore. Huge amount of people have equity in their property as well now. Therefore, if house price drops, it will make no difference to them. It will make no difference to the exposure of the banks. Therefore, there'll not be the huge problem, the catastrophic problem that they had in the credit crunch with liquidity. And therefore, the banks could not actually lend money to people to actually buy and sell houses. 2023 will be a challenging year for many Fife families yet. Yet as we go into this recession, I don't like to call it that because it's not that difficult in terms of what was the huge recessions of before. Because really a recession is two similar periods of negative growth in the economy, quarters that is. But we've not got these two negative quarters yet. Therefore, they're arguing that we're in recession already when we're actually technically not. So they're choosing to make up their own dialogue now, the media, in order to justify their position and sell more newspapers and more news. Therefore, you watch more news, they get more advertising. Therefore, they make more money. That's why they're doing it. Okay, stability is probably the word for the market. So let's talk about, and finally just finish off here, and we'll get on to some numbers here as we talk through. Let me have a quick recap of where we are, what's coming soon, what's sold, and what's coming onto the market. Here we go. Okay, what's coming on? What's actually sold? Let's cover what's sold this week. So what's sold this week? Well, this is 3 Links Place. This actually sold. Now, this was a 3-bedroom terraced house. This is actually originally had actually fallen through because the buyer's circumstances changed, and that's fine. But then we picked up another buyer, and that usually typically happens. It's easy enough to do because it's priced at the right price. This was listed at offers of 175,000, and it was sold. A 3-bedroom terraced house in Leaven, probably about 200 or 300 metres from the beach in Fife Coastal Path. Had to get a Fife Coastal Path in somewhere. Methelbrae was the next one, and we'll just flip onto that one in Methelbrae here. So this was Methelbrae. This was sold, and this was a 2-bedroom semi-detached house, and this was listed at offers over 90,000, and that was sold within 1 week in the Methil area. So properties in Methelbrae are going within 1 week in the Methil area at offers over 90,000, 2-bedroom semis. Miller Terrace is away. Now there's a surprise. It's sold in 1 week, 3-bedroom terraced house, and it was listed at offers over 300,000. 2 years ago, I sold one at 300, 3 years, maybe 3 or 4 years ago, actually. She's still working on it right now, actually. On the front end, over the street from this, with the beautiful views, I sold at 300,000, a 5-bedroom like this. So it just shows you how much the prices have actually dramatically come up in that area in that short period of time. But it shows me it's actually they've gone right back in line. Now, if you look at the price of this at 300,000 and you look at the average salary, which is about 31,000, this is about 10 times the average salary to buy this property. This is not a first-time buyer property, remember, though. This is an upgrader. So the person actually probably buying this is either a downgrader or an upgrader from a bigger house or a smaller house who's actually used their equity they've built up in theirs in order to leapfrog into this house. So therefore, the mortgage that they have is probably comparable to the same multiplier, which is around about the 5 times, 4 times average. So that all makes sense, hopefully, for everybody. So that sold in 1 week. So Miller Terrace sold in 1 week, offered over 300,000 for a 3-bedroom terraced house. These types of properties are going for that price. Kelsey House in Achtermuchte sold in 4 weeks, 2-bedroom upper apartment. This was listed offers over 120,000. These properties used to take ages to sell. Sold in 4 weeks, 120 grand. Shows you the market's still extremely buoyant for these types of properties. Next one, final one just now, Victoria Road, London Links. Guess what? This never even made it to the websites. It was sold from social media. No surprise. The properties like this are selling from the social media market. Victoria Road, London Links. This was listed offers over £500,000, 500,000. This sold. Offers over more than £500,000, 500,000, and this never made it to a website. If you've got a 6-bedroom semi-detached house or something similar in the Victoria Road area of London Links, we want to hear from you, because these properties are going for 500,000 above at this point in time, and they are selling for values that you would jump at straight away. Offers that you cannot refuse, sold from social media. That's how it's so important to understand what your agent is saying to you and take it on board and listen to them and adapt to what they are saying. Sometimes we go to people and say, look, you need to do a price realignment. You need to bring that in line with where the market is currently right now, because possibly a property comes on at that value at 500,000, and then what happens is other people's properties come on which are similar with other agents, and they then put them a lot lower. More inexperienced than anything, because that's not the natural price point anyway. However, that's in order to get a quick sale as far as my opinion goes. But then you have to be realistic. Then you have to think, okay, that could have been my buyer, but they've brought in a property from another area, therefore that's competed against mine. They bought that first, therefore you might have to take a realignment. You might have to go back down in order to bring somebody back up. Does that make sense? That can happen. I remember it happened to me years and years ago. Now, it was a three-bedroom semi-detached house in Canarchy Crescent, and it was put on such a low value that I ended up going to a closing date with everybody else and ended up paying more than what everybody else was going to buy it in the first place before. Just shows you different strategies for different occasions, and you don't need to stick with the one strategy all the time. You can change and adapt your strategy based on where the current market is right now. And sometimes it is worth realigning a price point. If you're with another agent, have a chat with them, talk to them, tell them that maybe now is the time to say, I tell you what, we'll take it off that. We'll bring it down just a point. Even if we bring it down 2% in price, it actually triggers a new release on Rightmove, Zoopla, Prime Location, S1 Homes, and all these other websites, because it has to come down more than 2% or more. In terms of the reduction in the price level. But it doesn't mean to say that the right person might not jump on it. I hadn't seen it before because it wasn't in their price bracket at that time, and possibly pay a wee bit more and bring it back up to where it was in the first place. That's a really important strategy to utilise. Coming soon. Okay, coming soon. Bodygate and Cooper, 5-bedroom upper apartment is coming soon, so watch out for that one. West 4th Street in Cellardyke. I have seen this property. It is a beauty. Wait till you see it. I think I'll be doing the pre-portal this week for that one. West 4th Street in Cellardyke, 4-bedroom terrace house. It's a cracker, and possible conversion in the garage out the back. Yes, it has a garage for off-street parking as well. Superb. And next door's actually converted their garage into a holiday home. Well, hey, for somebody to stay when they come and visit them. Wellesley Road in Methil, 2-bedroom upper maisonette is coming on. Toll Road in Cellardyke, you saw Jimmy doing a pre-portal on that. 4-bedroom semi-detached house there just a couple of days ago. Provost Park in Uchtermuchty, 3-bedroom semi-detached bungalow will be coming on as well. That's coming soon. High Street, Strathmiglo, a 3-bedroom terraced house coming soon. You notice that these people are all saying, let's go now. And you know the reason why. I've just discussed. Now is the time. This is the best time for a seller at this time of year, especially when nobody else is putting their house on the market. Very few people are actually doing it. You jump at the chance and getting there before everybody else. The buyers are all still out there. They look at your house. They have to move for circumstances. Think about it. You move for circumstances. There's only a certain amount of time you can wait, especially if you've got a family on the way, a young family, a new baby coming along. Especially maybe if you're, for example, if you are unfortunately splitting up, and it's like you have to find another place, you know, whether you like it or not. They'll not wait for the summer for you to then put your house on then and wait for your house to come up. These are people that are ready to go now. Completed. A couple of ones are completed. This gives you a good idea of where we are in terms of price point. The Paddocks, Grange indoors, 2-bedroom semi-detached bungalow. It was sold in 2 weeks, but it was sold for 2.5% over the home report value. It was sold for £5,000 more, £205,000. And it's because it suited that person's circumstances. And it was a great price point for that type of property, especially when 2 or 3 years before they were selling at 140 to 150,000. So it made all the right sense for the person that actually selling it. So it was a really good decision. So they said, yep, let's go. Swallow Crescent, Buckhaven, that was sold for the home report value. There's another one, 3-bedroom terraced house, sold for home report value. The new owner's delighted with a new family home, and the seller was actually delighted because it was a previous investment property. So there's another investment property actually being sold for a person to move in and live in it as their new family home. Interestingly enough, I talked about before, there's 1,200 less properties in the private rented sector than there was 5 years ago. There's about 9,000 new homeowners in Fife in the last 5 years as well than there was before. So it just shows you there's more new homes being built and more new homeowners buying, and there's less rental properties available. That's not a healthy conclusion to the private rented sector and even to the owner-occupied sector, because it then means that people that need to rent have nowhere to rent because they've not built enough council housing. Well, not built any council housing, to be honest. Okay, so that's it. The last thing I want to talk about is Wealth Creation Show. Just as a round off, I'll be doing Wealth Creation Show tomorrow. For anybody who's been watching this, it is the diary of a property investor. I am talking about my story, how I made my first million. Yep, how I made my first million from the very beginning. The first episode, and you'll see it in the playlist in here, and you can click on it for YouTube. And if you want to listen to it, you want to listen to the podcast, or you want to watch the show, I talk about my primary school years and how the baggage I had with me, the emotional baggage and everything that was done in my primary school years has actually been taken with me to my high school years, which was last week's one. And then high school years was never dealt with as well. And therefore that's been taken to this one I'm going to talk about tomorrow. So I've got a huge amount of emotional baggage, how I've had to deal with that over these years. But the reason I'm talking about that as a diary property investor is hopefully you've just picked up on the point, is how I made my first million. So even with all that baggage and everything that happened to me through primary school years, through high school years, I still managed to do that. And the reason I'm talking about that is because other people out there can still do that as well. It shouldn't hold you back, but we do let it hold us back. There's a lot of people out there being held back and not being able to offload this baggage, this emotional baggage that they've got on. And this is the only reason that I'm doing this, also to leave some sort of legacy or diary or experience and information for my children as well, other than, writing the book, because the book's going to be like War and Peace. So I'm better actually just put it on there and I'll do the book and I'll summarize that. But more importantly, you have an opportunity as well to ask questions when I'm actually doing that tomorrow. So Richard and I will be talking about my next year's. This will be the time that I've left school and what happened in the transitional period between school and actually the next steps. I will be talking about some key points here. How I met my mentors and they accelerated me and my career from homeless and unemployed. This is the period that tomorrow we're talking about, from the homeless and unemployed period. It's like, how on earth could you not have a job and be homeless and then almost within the next 10 or 15 years be a millionaire? How is that possible? That's what I'm going to talk about tomorrow, and that's what I'm going to talk about in that transitional period and how that actually happened from that time. So you can tune in tomorrow, 12:30. Richard and I will be talking about that and that next process and that next steps and some of the key secrets and key information I'll be sharing with you and telling you how you could do this as well. Even if you've got a fraction of that, then that would be great. Where are you right now and where could you be in the next year, 2 years, 3 years, 4 years, 5 years? This is the information that I got. It allowed me to set myself free and break away from that as well and get my thinking right. That's the most important thing. If you master this, the 6 inches between these ears, the brain, and master how that works, nothing will stop you. You will be able to achieve anything you want. Literally, I really mean that. So we're going to talk about the Wealth Creation Show tomorrow. And that's it, guys. Hopefully you've enjoyed that. Hopefully you've got enough information out of that. And until next time, and until tomorrow at 12:30, the Wealth Creation Show, it's goodbye from me. Bye-bye for now.